In a dramatic turn of events that's shaking Wall Street, the U.S. stock market has experienced its most severe downturn since September, with American stocks losing over $4 trillion in value. This financial earthquake comes as a direct response to President Donald Trump's aggressive tariff policies and their effects across global markets. The decline is particularly severe in the tech sector, with the Magnificent Seven taking substantial hits. Tesla led the retreat with a 15% drop, while tech giants Apple, Microsoft, Alphabet, Amazon, Nvidia, and Meta platforms saw declines from 2% to 5%. The NASDAQ experienced its worst performance since 2022, while the Dow Jones plummeted nearly 900 points, and the S&P 500 fell 2.7%. Trump's weekend comments added to market anxiety. When asked about a possible recession, he refused to rule it out, describing the situation as a transition period. His statement that we're bringing wealth back to America contrasts with market reality. Though Commerce Secretary Howard Lutnick maintains there will be no recession, investment analysts are concerned about the administration's stance. Shelby McFadden from Motley Fool Asset Management noted, "This is the first time an administration has seriously said that the targets will lead to pain. The market tremors are amplified by retaliatory tariffs from Canada, Mexico, and China, creating a bomb effect on stock valuations. The labor market, while stable, shows signs of weakening." Market watchers who initially believed Trump's pro-growth stance would boost the economy now express serious doubts about the administration's approach to trade policy. For investors and Americans, the question remains, can the economy bounce back as Trump suggests, or are we witnessing the early stages of a deeper economic downturn? U.S. stocks are experiencing significant turbulence, with the S&P 500 recording its steepest weekly decline of 3.1% in 6 months. Market analysts point to multiple concerning factors, including unpredictable tariff policies and growing recession fears. The impact has been severe in the technology sector, where industry giants faced substantial losses. Tesla's market value plummeted by $125 billion in a single trading day, while Apple and Nvidia each saw nearly 5% declines. The broader tech sector within the S&P 500 fell by 4.3%, highlighting investors' growing anxiety about high stock valuations. Adding to market pressures, Delta Airlines slashed its first-quarter profit forecast by half, causing its stock to tumble 14%. The Treasury market has shown signs of stress, with the 10-year U.S. bond yield dropping to 4.21% from its previous close above 4.31%. International markets haven't been spared, with Chinese stocks declining after consumer prices fell more than expected. European markets showed similar strain, with the Stoxx Europe 600 dropping 1.3%, though defense stocks maintained their upward trajectory. Lazard CEO Peter Orszag emphasized the impact of trade tensions, stating that tariff disputes with Canada, Mexico, and Europe are forcing corporate leaders to reevaluate strategies. The Wall Street Dollar Index reached its lowest point since early November, experiencing its most significant drop in over 2 years. President Trump acknowledged the challenging transition period, stating, "I hate predicting these things." Investment strategist Ross Mayfield noted that the administration appears more accepting of market declines in pursuit of broader policy goals. Investors are closely monitoring upcoming February inflation indicators, consumer confidence data, and job opening reports. The White House maintains that the economy remains robust despite market volatility. Good evening. Here are the latest economic developments affecting your wallet and the nation's future. Markets remain turbulent as investors grapple with uncertainty, with significant developments in North American trade relations. First, market volatility remains high. Despite optimistic voices in Washington, investors show increasing skepticism about the economic outlook. This quarter's data has been volatile, and while officials say tariff issues will resolve soon, Wall Street remains unconvinced. 3 critical factors are ahead: the upcoming inflation report, Federal Reserve interest rate decisions, and potential government stabilization measures. Market analysts warn that high U.S. equity valuations could lead to a significant correction. Breaking news: USMCA negotiations are starting a year early. Thursday's high-level meeting included Commerce Minister Lutnick, U.S. Trade Representative Greer, Canadian Finance Minister LeBlanc, and Ontario Premier Ford. President Trump, who signed the original USMCA in 2020, is using tariff threats as leverage. While citing concerns about illegal substances and immigration, sources reveal a broader agenda to reshape the agreement. Trump has criticized Mexico's energy policies and raised concerns about Chinese influence in the auto industry, though Mexico has received less Chinese investment than the US or Canada. He's targeted Canada's dairy industry protections and their auto manufacturing sector. Ontario's Premier Ford announced plans to eliminate export taxes on electricity to the US and reduce steel and aluminum tariffs from 50% to 25%. Ford emphasized relationship building, suggesting extended negotiations ahead. This is a developing story, and we'll keep you updated as new details emerge. Trade war escalates. Trump's tariffs spark global retaliation. In a dramatic escalation of international trade tensions, President Trump's recent tariff policies have triggered retaliatory measures from major trading partners, threatening to destabilize global markets and the USMCA trade agreement. The Trump administration imposed a 25% tariff on goods from Mexico and Canada, with an additional 10% on energy products and potash. These tariffs were temporarily suspended until April 2nd for USMCA-eligible automobiles, but the broader economic impact remains significant. Canada has responded with $21 billion in counter-tariffs targeting U.S. products, including fruits, vegetables, appliances, and liquor. They plan to impose another $20.6 billion in tariffs, specifically responding to Trump's steel and aluminum tariffs. The European Union implemented a 50% import duty on American whiskey, motorcycles, and motorboats, with duties planned on chewing gum, poultry, and soybeans starting mid-April. Trump threatened to retaliate with a 200% tariff on EU alcohol imports. Mexican President Claudia Sheinbaum's administration proposed aligning Mexico's tariff rates on Chinese imports with U.S. rates. "We prioritize trade with countries with which we have trade agreements," Sheinbaum stated, noting Mexico's significant Chinese imports. U.S. automakers are pushing for stricter USMCA rules enforcement, particularly regarding the requirement that 75% of a car's content value come from North American suppliers. Senator Bernie Moreno advocates increasing the non-compliance tariff from 2.5% to 25%. Some Republican senators warn against destabilizing the agreement. Senator Tom Tillis cautioned, "This is about improving a deal that President Trump got in his first term. But if someone is thinking about a blank slate, that could be destabilizing." As trade tensions escalate, analysts worry about the impact on global supply chains, consumer prices, and economic stability. The mounting tariff war threatens to undermine the trade relationships the USMCA was designed to strengthen. Breaking news: trade war escalates as new tariffs reshape global commerce. In a significant development shaking international markets, President Trump has launched new tariffs, intensifying the global trade situation. Here's what this means for your wallet and the American economy. The administration imposed a 10% tariff on Chinese imports, with Beijing countering with 15% tariffs on American coal and natural gas, plus 10% on crude oil and farming equipment. By March 3rd, Trump increased tariffs by another 10% on Chinese goods. Beijing responded with 15% tariffs on chicken, wheat, corn, and cotton, followed by 10% on soybeans and dairy products, severely impacting the agricultural community. China's now targeting specific American companies, restricting exports to 15 U.S. firms. Trump's also threatening a 25% tariff on European Union goods and announcing reciprocal tariffs, matching trade barriers other countries put on U.S. products. This move affects the EU, China, India, Mexico, and Canada. Implementation could take 6 months from the March announcement. The ripple effect of these tariffs could impact consumer prices and international trade relationships. Major market players are adjusting strategies, with some companies considering relocating supply chains. For average Americans, these trade tensions mean higher prices at stores and increased costs for everyday items. The agricultural sector, particularly in the Midwest, faces significant impact as China targets key farming exports. Financial analysts suggest this could be a pivotal moment in global trade relations. The next 6 months will be crucial as these policies take shape and international partners respond to America's trade stance. Stay tuned for more updates on this developing story.